Good morning, everybody. Just fix this freaking mic, yo. All right, so we got interesting situation today. We're gonna see how this goes. CPI week, CPI day today. So that's how y'all know. Could end up being a shit show, right? So we will see what we're gonna be able to get into. I think there should be something we could find today, but again, because it's CPI, we got to be a bit cautious, really cautious. CPI is a one-sided news event. And yeah. So wherever it goes, most of the time it's just going to keep going. Okay. If we take a look at what we have here, we have this breaker that we talked about. Obviously, price came up into this inefficiency. It had only sell side, price offered buy side, then buy side again, took out previous day's high as counterparty, and then went all the way down to our weekly fair value gap, which we mentioned on Sunday. And prices basically stopped right at that midpoint. You see how perfect that is? Literally the midpoint of that weekly fair value gap. And then we came off that low, right? Coming back in, flirting with this low. So one thing I want to point out, I think I talked about this as well on Sunday, if I'm not mistaken. But we have this monthly fair value gap down here that sell side was only offered below this portion. So this is the inefficient price delivery relative to this little area in here. So if they're going to keep this speed up and run lower aggressively like they are, this is where they're going to target. And if it's going to be bullish again, I wouldn't want to see it go any deeper than that. Because again, this high to that low, we have a stop run. So sell side, buy side delivery. So it should be balanced. It should act as a balanced price range. If this was the 5-minute chart, that's what we'd be thinking as well. So, just because it's the monthly chart doesn't really change anything. You know what I mean? Good morning, Sean. Fancy. Appreciate y'all for hopping on. But yeah, hopefully that makes sense overall. Okay, and then we got not only that scenario on the NASDAQ, we actually have it on the S&P as well. So again, we have this fair value gap. It's large, right? Why are we not using the whole thing? Well, again, when price offers sell side and then buy side, and we have a fair value gap, what ICT tells us to focus on is that little piece when you look to the left that has nothing there, right? It lacks sell side delivery in this area. So in order for the market to be efficient, they got to offer price in a sell side capacity in an area where there's a sell side inefficient price delivery. Okay, so the whole fair value gap might get utilized, but if we're bullish, we want to see this signature hold up in price. We want to see it go into these levels, stay in that upper level because we already have work that's been done here. This high to that low is also a balanced price range because it's got sell side and buy side delivery on top of the fact that it's a stop run and then another stop run, which creates a new dealing range, right? This low to that high. If you take this low extreme up to the high, our equilibrium for the whole entire range is essentially right below that area. Okay, so if it can just wick through that or just tap this, preferably it leaves it available, because if it leaves it available and then just starts to rip into the buy side, again, that'll be an early sign that price may look to give us, another little leg higher. If we break this low here, again, this also now becomes a bearish order block. So we'd have to see how sensitive price is to that lower 25 to 50%. But overall, right, for today, I think CPI will end up getting us down into that level, unless it's just going to use CPI in a positive manner and then ship it up to the buy side. Right, this was a really, really large run. Large ranges lead to small ranges, but because it's CPI day, we're going to most likely have another pretty dynamic price delivery. All right, so yeah, and then we got this large wick. Again, we got the weekly fair value gap. If you look at the daily chart, obviously we have this low with that volume imbalance. So we actually have this to pay attention to as well. Notice that it's filled it in pretty much entirely. We just left a little piece available. So the inefficient price delivery is more so relative to this here, right? The weekly fair value gap, lower portion. We have most of that offered. So it's got sell side, buy side, that's balanced. And we have buy side from previous. So what's really going to be the target if it does go lower is this low. And then of course the rest of this. And I'm not sure if we'll get any further than that. But again, beyond that, right, more excited target is going to be that monthly lower fair value gap. Okay, the upper part of that sell side imbalance. Well, buy side imbalance, sell side inefficiency. Okay, we got this order block here to support us. We have one change in state up here. And then we got the second change in state right there as well. So this, for right now, unless this is given up, is a bearish market. Okay. And the targets seem pretty obvious, hopefully. So what direction are we going to try to trade in? Obviously, we're going to look to try to go short. Can it go up and try to flirt around with this a little bit because it was so aggressive, right? I mean, sure, right? It could do that for sure. But we're going to look to stick with the narrative. I think that we can end up tagging this. And we still have a little bit of that daily fair value gap to get targeted as well. Okay, and we got sell side here, buy side, sell side. Price offered buy side one more time where it was inefficient because there was only sell side through that level. Price came up, offered buy side again, counterparty liquidity, and then it was off to the races. Okay. Again, those of you that were with me yesterday saw that we called this move ahead of time, real time. Price can't escape what we do here. And every single live call every week just further reinforces that fact. So yeah, we'll see if it wants to get overzealous and get down to here. All I really want is to see if we can tag this low. I don't really give a shit if it takes this out. I really don't care. We don't even really need it to tag that low. If we could just frame something getting down into that lower level in there, that'd be enough as well. So today you're going to want to seek 20 to 30 points. I'm not a financial advisor, so nothing I take a trade on or say it is a trade should be considered as such. And if you do take a trade, it's because of your own effort, right? It's not because I told you to, and it's just kind of the way it is. But yeah. Sean said, oh, nice. Yeah, Jen's going to be a savage. And hopefully sometime in the future, she takes my advice and starts a YouTube channel. Because she definitely seems pretty spectacular. So, yeah. Definitely a bomb in the making, that's for sure. Like many of you, right? If not all of you at some point. But, statistics are what they are. Just going to really depend on if you follow rules, if you're disciplined, you manage risk properly, and how much effort you put into learning this. That's going to determine whether you can be successful at this stuff. Because what we do works technically, right? How we identify price, where it's going to go. You guys see it every week here on YouTube, but my private group sees it every single day, which they attested to yesterday. Big moves like this are not rare, right? Being able to get in front of moves that are correct are not rare here in this community. And, I give you guys the blueprint. I tell you how we get to those results. And all you got to do is practice, right? And just keep showing up. And eventually you'll wake up thinking, wow, I understand what's going on now, right? So that's the goal. But yeah, we got the Dow dropping. We have a SMT up at the highs here, like we talked about yesterday. That has initiated this decline, right? And so all of this is balanced, like I said. So any retracement into that, we don't want to see the midpoint of this order block get violated. We don't want to see this wick act as support and then push price higher, because if it does, and we get this to end up becoming a failure swing, and we break above this level, specifically above the midpoint of this order block, then we'll have to then adjust and then think about this high. Before it gets to that high, we have this rejection block. And then we also have the quadrants in this wick that could be used as upside targets if and when price does look to turn around. Okay. Okay, Sean said, yeah, she's been my mentor for about 6 months. Oh, nice. I'm trying to see breakers and yeah. Nice. So yeah, when it comes to the S&P, we also see that this is pretty reactive to this level too. Everything is pretty much in sync going to the downside. Again, we have, is that a 2-day? It's a 2-day fair value gap down here. And again, this upper portion has been traded to. So if it trades lower, I'm looking for the midpoint, the 75%, and then full closure if we can get excited enough to do so. We'll see what CPI is going to do in 6 minutes. I'm assuming that this is going to be allowed to tumble down to the lows here. I'm not sure if they're going to do it in one shot. That is quite a large range. It's like 500 points, 400 points. So we'll see, what it wants to do in regards to that. Let me see. Yeah, like 400 points, 500 points. So yeah, hopefully the higher time frame makes sense. And then of course, we look at the currencies. They look like they're, continuing the sell-off, retracement, to then redelivery. Got this equal low down here. So low resistance liquidity run, if it does choose to go down there. And same thing here, right? We have a intermediate term high. So as long as this intermediate term high right here, lower head to the left, lower head to the right, high being formed inside of a fair value gap, as long as this high stays intact and we stay below levels like this, or specifically like this, right, being the inversion, we should be able to see this continue to slide on down. And again, we've had our target labeled down here for quite a while, for a couple of weeks at this point, and nothing has changed fundamentally. So it looks like we will be able to get that potentially today, right? We got a retracement ahead of a news event from this higher time frame. So the retracement and delivery from that news, from that PD array, from this framework here to get down to this higher time frame level, it's justified with a news event, because news events act as macros when you're looking for higher time frame price delivery from particular levels or to particular levels. Yo, good morning, Byron. Appreciate y'all hopping on. So again, hopefully it's clear as far as what I'm looking for. I want to see if that's going to happen. This wick here should be respected. This low should act as an intermediate term low. And then this thing should just catapult through to the buy side. We've now got the deferred liquidity logic, right? Traded up into high resistance liquidity. As we've talked about in previous videos, price is trading into that high resistance level. Price came down, took out some lows, or just simply retraced, right? Pulled back against that, didn't just take a straight shot through. And so now this retracement has now created low resistance liquidity above us. We have relative equal highs here, and we have a failure swing that's created off of this retracement. This retracement came down into a daily fair value gap that could be utilized for a run higher. This low to that high, I believe, created an optimal trade entry as well. It wasn't able to get to the optimal trade entry idea. So it's staying in that upper portion. That tells me that there's a high likelihood that we'll continue to go through to the target up here, and then potentially hit our extension levels that we've also have mapped out from this low to that high. Okay. And again, this right here was a monthly wick, right? So the rejection happened from there, and we should be able to see price run. We're in the upper 75% of the overall range too. Can actually frame from here. So 50, we're at the 75%. So we should be able to get a second stage distribution type of delivery. We have this high, speaking of breakers, we have this high to that low. Price broke that low and then displaced above this high, or at least got above it. That upper movement right there from this high to that low prior to the down move, drag that over, and once it gets above it, it should act as a breaker, supporting the idea of getting above the highs up here. Okay. And then we got this high, low, higher high. That was also treated as a bullish breaker, right? So yeah, that's my opinion. We'll see if we can be correct in this. Again, very large previous day's range, so we'll see what CPI wants to do here. I will not be executing at the moment. We're not going to take a trade right at 5:30. We're not going to take a trade right at 6:30 a.m. Pacific Standard Time. It's just not going to happen. And again, you're either going to follow rules or you're not. You're going to either succeed because of following the rules, or you're going to fail because you refuse to follow them, or even put rules in place. Right? You're either going to be selective and follow your model, or you're going to be a random gambler that wants to shoot at everything and suffer the consequences. Okay. It's very black and white when it comes to trading. There's lots of nuances, but still, when it comes to that stuff, it's very black and white. You're either going to follow the rules and be disciplined, or you're going to get smoked. Okay. So yeah, now we're getting above this high here. So let's see what that response is going to be like. If it trades down into this and supports this and we get displacement off of that, these highs right here might be in jeopardy. But if this is going to be bearish and it's going to continue, this low to that high, the midpoint should act as BPR, right? That whole range should be a BPR, right? It should be treated like this. Run up into it and then just keep falling like it hits a brick wall, because we have buy side and sell side delivery. This here is a smaller fractal of this. If we get sell side, buy side, and then sell side delivery again, that has buy side and sell side offered once this low is purged. And so when it comes back into it, it should hold it if we're going to be bearish. So that would be characteristics that would support us continuing going lower. Now, if this low stays intact, now that we've gotten above this high, if we get a trade back into this and it supports this order block, which is also a bullish breaker here, high, low, higher high, then that'll act as a small balanced price range. The wick here will hold price, and then we may look to try to attempt these highs. Like I said, the highs right here are at the midpoint of this daily bearish order block. All right. So again, we're going to let this unfold, right? Let's see who wants to get wrecked today, right? Let's see who they want to hurt the most. And then we'll look to catch continuation when it comes to this. If we get this inversion fair value gap to get a candle that closes below it, we should be able to see this act as a reclaim fair value gap. And then once it returns into it, we should be able to see it go lower. We have accumulation on a small scale, right? Accumulation in here. Both sides being purged. So since London, we've had seek and destroy. It had a little move in here, right? Just reaching down again, but now they're getting purged out. So again, this low to that high, as it's printing lower, if it's targeting this low, all of this range, as it prints away from this retracement it created, should be treated as a BPR until it fully finishes the low, which would then create this whole range as a balanced price range, similar to how it did here. Okay, this is just on a smaller scale. All right, so again, everybody and their mama is trying to short today as well. I mean, yesterday there was 1,600 points that we called, and it's like, if you saw that and didn't really know what you're doing, you're going to think, oh, it's going lower. Right? The assumption is that it will go lower, but again, we got to wait. Right? We got to let price come to us. Let's see what type of shenanigans it wants to do before it does that. We do have relative equal highs up here, so that might get purged out. Right? We've had a return into that if we go to the 5-minute. Doesn't show up there. Go to that 1 minute. You could see that it really treated that pretty nicely. These equal highs up here, obviously they look like they're pretty interested in getting up there. Remember, this response is off that wick quadrant, right? The upper, it's the 50% actually. That's the 50%. Yeah, right there, the 50%. So we'll see, right? We got this wick in here. I wouldn't be surprised if short term it looks to reach up into here, given what we've seen so far. What you want to do here is take this wick right there, break that down into quadrants. We have buy side, sell side with the wick, and then buy side aggression to the buy side. So if it was to send any price action down into that wick, that upper 25% would be sensitive, and then that would send us through the highs. But obviously it's really rapidly getting up there. So we'll see what it wants to do here. Again, I'm not interested in taking a trade right now, right at the open of the bond market, which is 5:30, or right at the open of this news event. I'm just not interested. You know, there's going to be moves later. ICT teaches that for any of the news events, the protocol is wait 30 minutes to an hour. If it's at 5:30, wait till 6:30. Okay? If it's at 6:30, wait for a half an hour. Wait till that first opening range is delivered, because the gamblers are going to be counterparty to our actual trade that we take at the proper time. Okay, that first hour, first 30 minutes, especially after a news event, I mean, they're just trying to wreck people, you know? And there's really just no reason to be a part of that. You may miss moves. You're going to miss moves regardless of whether you take trades right at the news events or not. So you might as well get comfortable with it and just accept it, that it's part of the game, same as losses, right? And then just continue to follow your plan. Okay, so we see how this is not being too sensitive to that upper 25% right there. So this retracement, as long as it stays above this, it still could want to get up here. Again, the narrative is looking like it's bearish. Okay, it looks like it wants to go lower. We're right at the start of the session, essentially. So them trying to punish early sellers or anybody that was holding their profits, I don't know why they would want to hold beyond 500 or 600 or even 1,600 points. But, you know, there are those people. So that's what this is taking advantage of here. Or anybody trying to get involved with CPI right from the start. So now we're getting that retracement. If it's going to go up there off of this wick, it's going to have to respond very quickly here. Yeah, it's going to have to really, really react if it's going to be trustworthy. Again, this breaker clearly from that 5 minute has beautifully held up. Let me take that off. So you go to the 30 minute. Yeah, so that 30 minute breaker there, it's definitely interesting to watch. I'm curious to see how this gets treated. We have a low, high, lower low. So this is actually a bearish breaker in itself. Low, well, we have a high, low, higher high into a PD array. And then we got rejection. So if this is going to be bearish, it's going to have to respect this level. It jumped up, right? But if you move up in time frames, you know, that just looks like a potential retracement into this inversion fair value gap, which is again also a breaker when you drop down into the lower time frames. So, but this is a pretty dynamic run in here. If we get a closure outside of this fair value gap, again, that may be another cause for these highs to get taken, or at least targeted, right? But again, overall, if we're going to maintain the bearish sentiment this low to that high, we don't want to see it break the midpoint. Otherwise, it may look to try to attempt, you know, to fill in some of this a little bit, or maybe even try to get up here. But even if it does get up into this level, right, we have a stop run there. Is that high resistance or low resistance? Let me know in the chat. Let me know in the chat for those of you that have been here for a while. If this does get up into this level, what is that? High resistance or low resistance? Plus, it's kind of consolidated. Okay. Yeah, exactly, Sean. High resistance. Can you explain why it's high resistance? Oh wow. Okay, well look, I'm gonna give you some key information here about the characteristics and identifying high resistance and low resistance. So a stop run above liquidity, would you say that work has been done up there and stops have been purged before it left? Yeah, so because stops have been engaged and we had an aggressive run away from it, that creates high resistance if this was to drop down below here and then try to run up through it because it's already got a stop run. Now, if this was a failure swing, right, say there was a lower high there, would you say that work has been done there, or is there unfinished business happening up there, especially if it's below some type of gap? Exactly. It's unfinished business if it's a failure swing because there hasn't been liquidity that's been taken. So if it was to drop down, take this low here, and then aggressively reprice towards that, if it's going to blow that high out with a failure swing, it's going to be a lot less resistant to blow it out. Okay, so anything that you see that's a stop run like this, or if it's a failure swing, that's how you classify high resistance or low resistance in the most simplistic bare bones approach. Okay, and of course consolidation, when you're trading into a consolidation, that's going to be high resistance because it's got price bouncing around and the price range is pretty balanced. So if it's going to get through it, right, say it drops lower into something like this and it's consolidated, if it was to drop through it and then try to trade aggressively, you know, through the high, say the high looks like this as well, and it's consolidated, that makes it even more high resistance. So that's failure swings and stop runs classification when it comes to high resistance and low resistance. You got consolidations that can automatically be assumed as high resistance because it's just all over the place in that little range, which should be a balanced price range when it does leave consolidation. So if it leaves it and then comes back, again, if it's going to get through the other side, most of the time it's high resistance. And then you also, when you're in a bearish trend, for example, any price action that goes against the overall narrative, if it's bearish or bullish, right? In this case, it's bearish. Anything that trades against that or is a counter trend trade can be classified as somewhat high resistance. Low resistance will come from you trading with the trend, with the narrative, with the bias. Okay. So, and you can perfectly see that in here. Would you say this is more low resistance or is this more low resistance? What would you say? Which one's more low resistance in terms of the characteristics? The right side or the left side? Yeah, bearish is low. So targeting this low, and it was a failure swing, like I said earlier, right? That becomes low resistance. But trading against that, right, as it was trading higher, there's lots of retracements. Well, you know, it's somewhat fast. If you're on those lower time frames, you can catch a lot of, you know, high resistance and low resistance. But in the grand scheme of things, from the bigger perspective, when we're determining bias and like the overall draw for like the asset where it's really going, this was clearly high resistance compared to this. This was counter trend to what prices wanted to do, which was go lower. Okay. So consolidations, right? If this went up above this and wanted to target this low, that would have been higher resistance. Is it always going to be 100%? Of course not. Sometimes there will be a consolidation that wipes both sides and aggressively reprices through that range, right? But again, by default, right, a good rule of thumb to have and how to internalize high resistance and low resistance, these are some very, very simplistic ways of doing so right away when you look at price. And it works and shows up more often than not in these forms, right? With these characteristics. Okay. And you always want to identify low resistance, balanced price ranges, right? Anything that has both sides of delivery that trades away from it, when it comes back into it, should be a balanced price range. A breaker is a balanced price range. It's got buy side, sell side, and then buy side again if it's bullish. So then when it comes back down into it, right, like this, we already have sell side, buy side, and then sell side again. If this is going to work out, the midpoint needs to be respected. Why? Because a breaker is a balanced price range, right? Same thing here. If this was an order block, say it's a bullish order block, right? And then you get a bullish candle, right? When price trades down into this bullish order block here, right? It should be high resistance to get through that because it's a balanced price range, order blocks and breakers, okay? And that's why when it breaks the midpoint, it most likely is going to go the other way, because if it's not going to be balanced and continue the ebb and flow to the buy side, if something like this was to occur, then you may be wrong, and it may require an adjustment, right? The 15-minute may look like this, right? The red lines, but the hourly or 4-hour may look like this, right? A couple candles. This could be a bullish breaker on the 15-minute chart, but when you go up to the upper time frames, it may look like one singular candle. That's a bullish order block. So you could see how they nest inside of one another as well. That's a huge epiphany that I had when I was first starting out, how things are nested inside of one another. Those lower time frame levels and PD arrays that you see on, say, the 5-minute or 15-minute, when you move up in time frame, there's a deeper context. And if you can catch a lower time frame model inside of a larger time frame context, that's where the holy grail's at for finding good dynamic price delivery, right? And not get chopped up so badly on the lower time frame, looking for just simply lower time frame entry patterns, right? We don't trade patterns for pattern's sake. We trade delivery, the style of delivery, right? The delivery is what depicts what's really going on, right? And how you're able to determine whether something should hold or not just a simple visual of what's going on, like a specific pattern. Patterns without context or understanding of delivery, right? That's why people fail with any of the PD arrays, let alone some of the more advanced stuff. So yeah, hopefully that makes sense. I noticed that there's no bottom wick on the daily, April 24th. Let me see. Okay, that's kind of far away. Talking about right there. Right there. There's no bottom wick. Do we normal go back to that? Do we normal go back? Can you rephrase the question? Possibly. Not sure. Are you saying that because there's no wick in there, it has to be offered? Because that wouldn't be true. Just because there's no wick doesn't mean it has to go down to that. It's just a candle that didn't really have any sell side. We have sell side over here. You know, having a wick is nice, right? But it doesn't have to offer, just because it doesn't have a wick coupled with the body, it doesn't mean that it has to go back over there. Because again, was there sell side here on the previous day? There was. Now, if there's like a new day opening gap in there, some other gap that's associated with that low, then you may have an argument, right? That it's a little bit different than just a candle without a wick. Because remember, at any point in price, there has to be buy side and sell side delivery. That's why they came up into this specifically, because it was sell side, but there wasn't buy side. So it was inefficient, okay, relative to this level. So what did they do? They ran it up to offer buy side delivery, used previous day's high as counterparty, and then took out our low resistance level that we talked about because of the failure swing, because of the weekly fair value gap draw. And we're where we're at now, right? There's a little gap in here. I'm assuming that gap, yeah, it's the new day opening gap right there. Again, we got this wick in here. If we do get this to aggressively start to reprice and say we get up above this, we may see this overall price delivery turn into an attack for these upper levels, or just simply, to this level, because this down movement here in itself, all of this, you could just use the bodies, you could use the wicks too. I use the wicks most of the time when it comes to a breaker identification. But this low, high, lower low, that's a bearish breaker. So that's the line in the sand. If this gets above this high, that's already a red flag, right? We've already taken liquidity. Well, it'll be showing a respect to this wick, these quadrants. We don't like that. We like to see it slide through aggressively if it's reliably going to go lower. Of course, this is the daily perspective, so it's going to take a little while for this to unfold. So it may not close here. It may close down here. It may blow this out. But right now, this is what it looks like. So if it was to get up beyond this level up here, this low, high, with a failure swing, if we break this high becomes a possible candidate to be targeted if we could then see this also get violated as well. Because that'll be what ICT calls a type 2 dealing range. It's also a mitigation block, and it would also be a reclaimed fair value gap. Okay. We got buy side imbalance, sell side inefficiency. So if price runs through that and comes back down into it, right? We've already offered sell side. So technically this area should be balanced. So we shouldn't at this point really even close above the midpoint of this gap if we're going to continue to be bearish. It's great that it got up there, right? That's totally fine. We would have preferred to see that it didn't get up there. But again, if we close below that, we have buy side, sell side, and now we got buy side once more in that lower 50%. So if this is a reliable fair value gap that we're going to use as inversion to go lower, it's going to have to stay below on a closing basis that lower portion, preferably the lower 25%. Seems like we're staying below that lower 50% pretty nicely though. So all of this run higher was probably to pull people in, and then we may end up seeing price be able to get down into these levels. I like this 25% down there of that daily wick. It's right there. Nice big figure too. We got 500. But again, what we're monitoring right now is how this fair value gap gets treated and how this fair value gap gets treated, the inversion. Okay. If it's bearish, it's going to have to hold this. If it's bullish, it's going to break through that and then get above that. Once it does that, then we're able to then target this reliably. But we're going to stick to the overall narrative, one-sided, with contingencies, obviously, that being this high and this inversion. If it stops being an inversion, we'll end up looking to try to target this up here. We don't want that if it's going to be bearish. The narrative is bearish. If we close below this fair value gap too, that's a beautiful sign. You see how it's beautifully up to this point respecting that logic with this being a balanced price delivery. This inversion is confirmed as an inversion once you get this candle. Why this candle? Can any of you guys tell me? It's a key element to inversion for value gaps, or just fair value gaps in general. Why is this candle significant in the confirmation of this being an inversion? What about this candle? while you guys are thinking about that, we're going to actually drop down a little bit. So yeah, what about this candle? You guys know? You guys could say that you don't know. That'd be fine. I just want to see if any of you guys know. Okay, I'm going to assume that you guys don't know that one. So that fair value gap, once it gets inverted like that, it wasn't confirmed in here. What's the difference between these candles and this candle here? Let me know in the chat. You guys could throw guesses. Don't be shy. Don't be scared of getting the answer wrong. I'm sure you guys know. You probably overthink it. Which my answer is going to probably prove it. That you're overthinking a little bit. No guesses? All right. I'll give you the answer. So price balanced out this range. It closed inside of that fair value gap. So it has a likelihood of still holding to go higher. We haven't closed outside of it. This candle displaced and then closed. So we got displacement and a closure outside of this fair value gap, which triggers the response being an inversion fair value gap confirmed. That closure of the candle. Okay. And so when it returns back into that, we've already confirmed that is an inversion. And then if this was to close back outside of it again up here, that confirms that it's now going to be reclaimed. And then we should again look for things like this. And again, that's a failure swing. It is going against the overall narrative, right? Unless things were to overall change. But yeah. And then for example, this fair value gap, right? If it's going to be an inversion, we need that closure above. Okay. And then once we get that, this has a chance to then push us up to the buy side. So very simplistic. I'm sure most of you guys probably knew this or thought of this, but weren't sure. But this is how you confirm inversion fair value gaps and fair value gaps themselves. It's very, very powerful for inversions too. So yeah. We could see that this 1 hour fair value gap here, we have lots of trading buy side and then back in sell side. You see a closure happen here above that upper portion. But again, the larger narrative denied this ability to keep going up. And again, we'll see if that's going to be the continued sentiment. Seems like it's still holding pretty strong in here. We've got this order block, stop run. Again, bullish breaker. Let's go to the 5-minute chart. You know, we do got trend line liquidity up here. I'd say that if, again, this gets above this high, we will then map this out as a market maker buy model. Okay. And you can rest assured that if this gap gets traded through and we get a closure below it, any return back into it, we'll then be able to then target this, and it should be low resistance to get down there. And then all of this will have been fake. This high to that low You guys could go in there and paint the picture of a small fractal market maker buy model. This high to that low, breaking above the highs. If we go to the 1 minute, you could see that it has characteristics of a market maker buy model. Again, this is that low here. So you can see how many times market maker models unfold. Sell model in here. Inside this run higher to go lower. You can find a sell model in there on the seconds chart. This low to that high, if we break it down, we need to stay below this accumulation, right? The previous bullish order block on the left side that held up. You just drag that over and it should be able to get back down below that. So if we take the level from high to low, you could see that this candle, right, the high right here, look at the chart on the left. We're closing below that accumulation in this market maker sell model. So it's still closing below it at the moment, right? It's right there. That's also coupled with this inversion. Again, that inversion is beautifully responding to price right now. It's beautifully, beautifully, beautifully holding it. So again, if it was to break this high and close above this gap, it'll then look to try to run up and purge some of this. But again, I'm going to lean more so on the side of continued sell side until proven otherwise. I'm more than happy to let this first, these first overall setups leave without us. In the pursuit for the better move. CPI didn't really have much of a reaction. I mean, I guess that's a reasonable reaction. We still got to monitor this breaker. If the breaker gets traded through this last up candle, if that gets traded through, then we could look at that as a potential inversion. We'd like to see that be the case if we're going to look to go lower. We do have this fair value gap in here. So again, a closure below that confirms this as an inversion. Any return back into it would be able to hold price if it was to continue to drop. And we don't want to see this bullish order block on that 1 hour chart hold up, right? Because if it does hold up, right, this bullish order block, again, is a bullish breaker on this lower time frame. If it does hold up, then again, getting above these highs here, getting above the inversion for value gap high here, turning it to a reclaimed, gets us up above these highs here, which is right there. And once it was to get up above this, the range is still about 100 points. All we're aiming for is 20 to 30 points every time we get on the chart. That's literally it. Preferably you can hit 60, but you want to grow into that because you can live in 20 to 30 points, and I've proven it. I've shown you guys. ICT has proven it and shown us. So don't let social media fog your brain and your perspective as far as what is acceptable or not. You'll grow into these larger price swings like we showed yesterday and show many times. But again, it's going to take more effort, more study, more understanding to be able to get in line with those bigger moves. And they all come from the higher time frame framework, from 15-minute and above. If you could frame your setups off the 15-minute and above, you'll be able to see a lot bigger moves rather than just living on this 1 minute chart. All right, so yeah. So if we're looking at this, right, if this low gets violated, again, we have consolidation. Us breaking down below this low here, we would have to start to see respect in this level. We shouldn't see it break above this high if it was to break this low. If it breaks above that high, then that may set us up to then try to target more buy side, because that would also be respecting this gap as well, along with the breaker. But all of this should fail to the downside if we're going to be bearish. which is what my main objective is. Got failure swing in here. We're starting to see respect to this, right? So order block being respected. Bodies of the candles closing below 50%. The upper portion of this gap that we outlined, it's respecting that. So we should start to see displacement. It's a macro right now too. Got this order block. Remember, whenever there's an order block that forms, you want to think, okay, it should be a balanced price range. We should see that characteristic in price. We should see a closure only below the midpoint. It could wick above it, that's fine. But we want to see closures stay below the midpoint. Of course, that's on the lower time frame. You always want to make sure you move up to see if the context from the higher time frame also justifies what it is that you're looking for in that lower time frame. Right? We have this large wick. We got rejection block in here. You can see that it respected that pretty well. And then again, we have that 1 hour inversion. For the 4 hour perspective, you see this open price from one of our indicators. See accumulation, manipulation, distribution ahead of that new 4 hour candle. So we'll see what happens. It's respecting that level. This is a new week opening gap, this green line in there. It's from previous. By the way, something I wanted to point out. You see central bank dealers range in here. Get that 1 standard deviation, get you above this high. It got us in the daily volume imbalance. And it also was the high of the day. So central bank dealers range and Asia also supported the move from yesterday. Something we didn't really mention too much. I don't think we even talked about it at all, honestly. Something I was watching though. We got our projections in here too. Central bank dealers range, Asia range. So these are also potential objectives if we do get price to break down. But right now, where we had that jolt of volatility, now we're kind of resting inside this area. So I'd like to see what happens. I'd prefer to see us break down through here before I look to engage any type of short. Getting us down into this level disrespects the breaker. It violates the midpoint of the bullish 1 hour order block. And it also confirms, if we get a closure below that, an inversion for value gap, which is also nested inside the 1 hour inversion as well. And below this one too. So yeah, hopefully everything makes sense. Let me see, you guys got any questions? Let me see. Oh, damn, you took a short, Byron? Sheesh. Remember, we're still pre-market open, brother. So if it doesn't want to go for you, like within the next, I don't know, like 10 minutes. 877. That's a nice entry there. Right, pretty much right at the upper portion of this. People have been stopped out. Okay, we got that order block breakdown. It's respecting it. So again, it's a little more aggressive than I like, but if we're correct on narrative and it does target sell side, that could very, very well be the high of the manipulation that took place. And all of this up movement will be manipulation. That'll be a nice ride down, at least below this low. But again, I've cautioned because of this. Right, this very well could try to take these equal highs before it looks to give us that overall short. So we will see what it wants to do here. So yeah, we got that 1 hour. That wick right there. You see that? See the closure below this fair value gap? Also below that 2 hour one. We like that. We want to see that continue. If it continues, we're good, right? It'll keep going lower. And then this order block, if it can create another order block, like on this candle, and then displace through it, we'll have a double change in state. If this comes all the way up into this and then displaces lower, that'll be a propulsion block, which is just an order block with an order block that closes inside of it before it moves away. So let's see what this is going to turn into. These are relatively equal. I don't like that they didn't take this high up here. It makes it really risky. That's something that disqualifies me to take a short when there's equal highs that are left. So perfect. I mean, it tagged it a little bit in there. If that's all it needs and this results in a breakdown, then that just shows you how bearish things are. We're very, very bearish at the moment overall. But large ranges lead to small ranges. So we may get somewhat of a tricky small range today. It's already still an inside day already. Basically trading currently inside of the previous day's high and low. Yeah, when that's the case, sometimes it could be a little hard to get follow through, right? It could have jerky moves like this, but then come back to the middle of the range and then just decide not to do much. So that's a risk whenever you trade on days like this. I was expecting CPI to give us that big move that we had yesterday to target our levels. It blew out every target we laid out. But, you know, of course it already delivered it. 1,600 handles is, I mean, that's like multiple days ranges. Watch, we could actually double check how many days. So the average daily range from the last 5 days has been 900 points. That's nuts. Almost 2 days of range of these massive ranges was done in one session. In the AM session, not even in the PM session. The AM session alone going into lunch hour, right? So the 2 hours from the open to 8:30 AM Pacific Standard Time, 11 Eastern. So yeah, what a crazy situation that is. I wonder what today's range is going to be, how big it's going to be. Yeah, you guys have any questions before we get into the open? And again, any trades that we take because CPI happened yesterday, or there's just CPI this week in general, any trades we take has to be at lower risk. You don't have to, but again, over the last almost 7 years, if I would have followed that rule, I would have lost a lot less money, right? And a lot less mental drawdown to go through, because you just never know, you know? Just because you can run into the battlefield shooting at everything, you know, doesn't mean you should, especially if bombs are blowing up everywhere. You know, there's actually bombs blowing up in places right now. let alone in the charts. I mean, this right here, that's a bomb right there. So again, you see the indicator mapping this out. So we'll see what happens closer to 7 a.m. Wouldn't it be very interesting if this was the actual accumulation, the manipulation, and then it distributes by 7 a.m. or maybe a little bit sooner? The indicator mapped out power 3 literally perfect yesterday. Accumulation, manipulation, distribution. Like perfect symmetry for the 100th time. Yeah, I have a indicator suite that I've created, a couple of them. It's SMT indicator, a timing indicator, 4-hour open, an indicator that one of my students created for us all. I got my model indicator here for one of the models I teach, which is called the Razor model. And then I got another one for a specific time element. So that comes with being in my private group, along with a journal, a custom journal. It's pretty much a TradeZella competitor. Documents all the same. Shout out to Harley, by the way, one of my students. If you don't follow Harley, you should. It's been a student of mine for years. Going on what, 2-3 years now? Yeah, that's correct. And of course, when it comes to that tier, that's tier 1. So the indicators don't just get given to tier 1 because people could come in and just take it and leave, which I can't stand. So there's a limit. It has to be 6 months in the private group before those get released. Or if you work with me one-on-one, they come with the one-on-one experience as well. It just has to be that way, you know what I mean? Yeah. So they're helpful, right? They're not like be-all end-alls, obviously. The be-all end-all is all the stuff that we talk about. But yeah, they just identify certain things to help you gain your footing, and then also kind of help with pattern recognition over time. So then eventually you don't need indicators, but I don't need indicators, but I like to consolidate my thinking. And every indicator that I have created or will continue to create over the years, it's going to always be leaning towards that objective, not to make a trade other than this one, which is specifically to point out trades. Other than that one, it's all just fundamental, foundational level identification to help justify and visually bring to life the things that we talk about. It's especially going to be true with the bias and narrative indicator that I'm working on. Basically going to take my whole Sunday process, my whole daily process when it comes to what I look for bias and narrative overall, and then automatically spitting out an assumption. Of course, I'm not going to release that until I know for a fact that it's at least 80% accurate, like we already are. It'd really be no use if I just release one that's not as good as I personally am. Because again, I'm going to want to have a student option as well, where it'll break down everything, show little notes here and there, kind of guide the student on how to apply it, right? But that has taken a lot more work than I thought it would, but still in the works. But yeah. So again, we're just waiting in here. None of this is telling us that sells are off the table. It's kind of stalling out. It's typical when they run price so aggressively like that. I have all the details for the one-on-ones when you go to the checkout page. And then it's pretty much, me being a one-on-one mentor, right? Personalizing your experience. You get to schedule one-on-ones, and the opening for the one-on-ones generally, unless someone drops out, is available every quarter. the new quarter's coming up. So on the 16th of this month, I'm going to assess the students that I work with. I think a lot of them have made a lot of progress, except a few. But the openings will be available, and the first dibs go to my private students. And then if that's all exhausted, I bring students that are not part of the private group in if they want. I can only accept 20 per quarter. It's a lot. It's a lot. The live calls that we do together are like 3 hours long for each student, multiple a day, right? So I mean, I wish I could duplicate myself, but it's just a limitation. I mean, that's why a lot of people don't offer it, because they can't have more. So they just throw a course at you and tell you to go figure it out. But I don't have that type of vibe. Didn't really work with me. I had to have one-on-one mentors. I paid thousands of dollars, but it was worth every penny. You can't beat a one-on-one experience with somebody that's willing to do this with you every single day, and then allow for a more personal approach, so then they can kind of point out maybe blind spots or just clarify things, organize your process a little bit, but then at the same time let you keep that personal approach. It's a lot of work, but it's definitely one of the more fulfilling things I've done in the space. Especially when you take someone that has no idea what's going on, and then all of a sudden one day they realize, like, I know what's going on, right? There's just nothing like it. Yeah, I'm in a Discord right now, but like 600 people. And so I was telling Jen something. Yeah, that's another thing. Like, my community is going to have a limit. I'm only going to allow 100 people in my private group. Once it hits that, unless people drop off, well, if it's all one-on-one students, then it's going to be permanently closed, right? Because they won't leave. Most people don't leave anyway, because I mean, this stuff just works. Everybody in the private group is supportive. It's very exclusive. I don't act all brand new, like, oh, I'm this and that, so I can't reply to your messages. I make sure that everybody gets the time that they need. And I can't do that if it's such a huge community unless I hire educators, which, that is an option. But, kind of shaky option, something I'm not really trying to do right now, just in general. I like the exclusivity, because then I could ensure personally that everybody is making progress. I can get to know everybody, because that's my goal. I'm trying to get people to actually do well. If I wanted to make a course and do what everybody else is doing, I could easily do that. But I choose not to. I make enough in trading. I have to have a barrier for people that are not serious, because I just like anyone else, don't want to waste their time with someone that's not serious. So, because that's the case, my students pushed me to make a paid private group because they were tired of the spammers, the complainers, the whiners, people that don't take no self-accountability. So they're like, why don't you just, put a reasonable paywall? I'm like, all right, see how that goes. And it's turned into what it's turned into. And again, the exclusivity is what I like. We talk about this all the time in the private group. Maybe not all the time, but sometimes. And everybody likes it. Everybody gets to know each other. It's just like a family, and that's not necessarily the vibe in these gigantic communities where the mentors probably not even actually trading. Most of them aren't. I have friends in some of the biggest people's chats, right, or their private communities, and they're close to these people, and they tell me that they don't even really trade the way that they show. They're just really good marketers. Like, I have friends that are friends with some of the people that all of you probably know, and they tell me this, and I'm like, wow, that's a shame. So you can rest assured that this community is not that. This YouTube channel is not that at all. I show it every week in my private group every day. and my students do too. So I don't know. That's kind of just the vibe. For those that may not know, those that may be new to the channel, new to watching my content, that's kind of how we run things here. Trading's enough. You don't have to do anything else. But if you are going to do something else and you love this industry, make it accessible. If you do go that route of having a community or whatever, but you're going to get to the point where you're making money in trading. Once you arrive, you're gonna be like, I think I'm just gonna live my life. Some people, that ends up being the reality. It's a lot of work trying to develop traders, and if you're not really passionate about it, you're just gonna end up hurting people, like a lot of these mentors do. So yeah, it's kind of the reality of education in the space. Outside of ICT and like a handful of others, all of them of which are charter students with like over 5 years experience, they're pretty much fake. Anyone outside of the handful of people that I mentioned. So yeah, be careful, guys. I was burned too. That's part of the reason why I started sharing my opinion. Because I'm like, let me try to fix this problem that I see that everyone's being victimized by. And I think we've done a good job. And I intend to keep that going. Let me see. Did I miss any questions? Oh, yeah, there's a lot of mentors out there who are more about Lambo. Yeah, no, that's a fact. It's a sad reality. And most of those Lambos are not from trading. It's from other stuff, affiliates and all this other stuff. That's great to have an affiliate link or whatever. There's nothing really wrong with it. But if you don't know how to trade, you really have no business even referring anybody to anything or even telling anyone anything publicly. Because this is not a game. People come to trade. They put their life into this. They put their ego, their pride, their self-worth, their success or failure. All of it gets put into trading. It's not just a chart. So being a mentor needs to be handled with care. And unfortunately, the standard, it's not the standard, right? Like they're here, they just want to make money. And I guess it comes with the territory. It's always been that way. Human beings will be human beings, right? But I don't know. I wouldn't be able to sleep at night knowing that I'm teaching something that I have no idea what the hell I'm talking about. Knowing that I'm not profitable, but somehow I'm going to sell something to someone else and they're going to be sold to be profitable when the person's not profitable. Like it makes no sense to me. But again, humans will be humans, right? But we don't have to be that way. All of you don't have to be that way. And again, you learn the skill and you can prove it. Many doors open up to you. Many, many doors. And you don't even have to open those doors. The one door trading is a big enough door for anything that you've ever wanted to accomplish. You just have to work to get there. And most people are lazy. So they don't want to work to get there. They want to get it faster, right? So they try to go a route that's quicker, less resistance, right? So they take that low resistance opportunity by selling stuff that they can't even prove. There's nothing wrong with selling something that has value. There's nothing wrong with someone valuing their time, right? Especially if they've been through it. They've done it for so long, put blood, sweat, and tears and things, and want to pull others up. But it can't be all about selling somebody something. That's not what this industry is about. At least it shouldn't be. Yeah, it's funny. I have friends asking me to teach them. Like, I don't even. Yeah, I mean, that's the thing. If you do have friends and you know basic information, remember when you were first learning, right? This goes for all of you guys. If you guys have a basic, like a basic understanding of some of the key basic components, just be honest with them. Say, I'm not where I want to be yet, but I'll be able to give you some pointers on some of the basic stuff. You know what I mean? There's nothing wrong with that. You shouldn't feel like you shouldn't feel guilty if you do want to help them and just share. Because who knows, you guys, could learn together, and then maybe at some point, someone that you taught the basics to may become a superstar, right? And you'll be able to have played a part in that. It feels good. I don't know. Some people don't like to teach. It's exhausting, but knowing what it can do for someone's life makes it worth it. It's hard. It's hard to teach. This stuff in particular, if you're trying to really get them to succeed, and you can't guarantee it no matter how good you are, because it's up to them to follow the rules. It's up to them to, do what's required to do you can't backtest for them. You can hop on and let them watch you like this, right? You could trade with them, but when you're not there, you got to equip them with the weapons that are going to protect them first and foremost, which is risk, right? And then everything else comes after. But yeah, Sean, I'd like to know a little bit more about your journey. If you don't follow me on Instagram, I encourage you to. Just give me like a quick rundown of where you're at, your skill set and whatnot. So then I'll know kind of where you're at, and then I can help you in the best way. But yeah, good morning, Jen. We were just talking about you earlier, by the way. Hope you're having a good morning, Jen. Okay, here comes the chaos. Okay, so now we got a regular trading hours gap. Look at what it's doing. It's coming right to the mid. Remember what I said about this equal high up here, how it disqualifies my interest to want to take a short, and how I wanted to see it get down to here to prove it before I wanted to engage in a short. It's right now respecting this breaker for the moment. But again, it's too close to 630. We're going to wait till that macro comes out. Do we have any other news? Okay, no news. Tomorrow might be interesting. But we'll see what the rest of this session does. If we do offer solely buy-side delivery in here, say it gets above this wick, right? It may look to try to blow this out. Depending on how it blows this out, if it just like shoots a wick up there, we would then have a imbalanced regular trading hours gap to the sell side. If it only offers buy-side delivery, and then it takes this and then rejects hard, again, we would still be potentially okay to watch for lower prices. Obviously, we'd have to be cautious and watch the response that goes lower. But this having one shot through to the buy side, you guys always got to remember that if that happens and it's aggressive, it may not come back right away, but at some point it will come back, and then it has to offer sell side in a quick manner because it's inefficient to the sell side if it only offers the buy side. Same thing if it only offers the sell side, right? Say this gap was down here and price was up here, and it only offered sell side, came back lightly, and then dropped down. At some point, it's going to want to come back up and offer buy side. It has to offer both sides in that price delivery for it to be balanced. And again, price is only looking for one of three things. It's only doing one of three things: attacking liquidity, highs or lows, creating rebalancing or retrading to an imbalance. And if you can't determine one of those two things, it's going to consolidate, right? So that's literally the only thing you're trying to determine when you think of bias. Where's it reaching for? Okay, well, one of those three things has to be taking place, or should be assumed to take place. And if one happened, like say it hits an imbalance and it's trading away from it, what is it going to target? Liquidity, highs or lows, right? So in a nutshell, narrative and just bias overall can be broken down that simply. So yeah, now we're getting a failure swing. Let's go double check. Okay. Really no SMT up there. Let's see how this is treated. If we get below this low, that becomes a bearish breaker. This high, low, failure swing, once it breaks down this low, right, these down candles, you can map that out as a mitigation block. Let's move up just to double check. Yeah. High, low, failure swing, breakdown. It's even more clear here. It's a mitigation block. So yeah, it looks like the narrative is still unfolding. So now breaking through this low here, we have buy side taken here, sell side taken here. This should be a block of balanced price delivery. And that's coming off of this. So it started here. Now it's pushing through that. So any return into this red line is the mitigation block I just outlined. That should be sensitive if we're going to look to go lower. And if this was to break through the midpoint here, that sets us up to then target the equal highs. Again, it's too early in the 6:30 time window. I want to wait till the macro. It's just going to be better. Yesterday was a good example of that. Waiting for the macro. Yes, moves took place, right? We called multiple moves. We called like 4 moves before the main move came out. But the main move came at 7 a.m. after that first opening range. But yeah, you see the sensitivity, right? Again, there's nothing inherently wrong with that being an opportunity you consider engaging. But again, I have very specific rules. If it's not going to deliver around my macros or the macros, at least 5 minutes before, which is acceptable. If it's so close to the open, I'd rather wait. Let's see the gamblers get wrecked. We have accumulation, manipulation, distribution. This should act as a rebalance and then redelivery. So you could honestly wait for that to unfold and confirm the accumulation, manipulation, distribution, rebalance, breaking down below this, creating a bearish order block, right? You could do that, right? That'd be the better option because look what would have happened if you took a short. You most likely would have got stopped out unless your stop was up here. This is not trustworthy to go short. I personally need this to go down below this. If it goes below that, I'll use that. We're also reaching into the other level that we talked about, which is the main confirmation for me to go short. It's also going to be the second stage distribution area for this buy side to sell side delivery. I really don't like these equal highs up here. If it gets above this high, that's a breaker that'll then be used to target the highs up here. Maybe it looks to close in the gap or just simply reach to that midpoint. So yeah, you see that right there. So if this doesn't deliver the redelivery here, like it's not right now, then you just think, okay, accumulation, manipulation, it's also a breaker, distribution that gets above this high, the return into that should be classified as rebalance. This should be looked at as a new balanced price delivery. Basically all of this. Then as it goes up, it's going to be balancing out this high to that low. Okay? We're right here right now. So this should be rebalance. And then redelivery. Right? It should get us up above the highs up here. It's just not in the macro. So again, whether it works or not, it's kind of irrelevant to me. I'm going to wait till the macro comes out. Very seek and destroy vibey. These equal highs, though, are very, very easy targets. Plus, we're now above this inversion here. The bullish order block here is being respected. Right, we got a wick down. It failed to break the midpoint. And so now we see displacement through this wick. This wick, which is up to this high, once it gets above that high, if it comes down into it, it should be looked at as a BPR. Yeah, you see that redelivery? Damn, that little move right there was already 70 points. Holy crap, dude. That's a lot. Damn, so yeah, that means this right here, if that right there was something to execute, 70 points could have been offered there, 60-ish points. Say you took that and then price got up above here, right? That right there, like I said, if it's going to target these highs up here, which is more than likely given that it ran so deeply into this, it offered the buy side right there. Now that we've purged that, I'm very curious to see what it's going to want to do here. Yeah, that was a nice move. It's just not in the macro. It's not close to the macro. I have to at least have it close to the macro. If an entry is not given close to a macro, you want to at least see an entry or the start of the move happen in the macro. And then midway through that next hour, say inside the 650 macro, this low formed, but there was just no opportunity to engage, and there's a target to reach for, right? If it moves and there's no opportunity, well, within, what is it, 610 to 650, or wait, if it starts at 650, 710 to 750, within that time window, right, from macro to macro, as long as the move starts in the macro and you can identify it, even if there's no setup, you can still catch continuation if you have a logical target to reach for. Does that make sense? My max trades per day is 2. And I haven't taken a trade, so I don't know what that comment is. Let me see. Did I miss a question? Yeah, does that make sense, you guys? Does that make sense? And of course, it's gonna depend on you how strict you want to be with the timing element. I get reasonably good results from using the time specifications that I talk about, that ICT teaches. And it doesn't stop us. We miss moves sometimes, but hey, you're going to miss moves no matter what you do. You're going to lose moves no matter what you do. So it's not nothing to be concerned about. So yeah, this, if it's going to go higher, it's going to have to hold this level. Yeah, we got the dollar declining in here, so that might be somewhat of a catalyst to allow this to keep going. It's already purged the highs out here. I'm not overwhelmingly bullish on the market right now, but we do got a correlation problem. We got the dollar declining. So yeah, let's see what happens. If this gets below this low, then again, we have stop run, low, high, lower low, breaker. That'll be a trigger point for us to then continue to go short. Yeah, I don't like how deep this is going into that to consider. We're getting closer to the macro, so we'll see what happens. If you do see a breaker that goes deep into the breaker like that, you have to wait for a change in state of delivery. At least I do. It's just part of the rules. Because this can easily break. Once it closes below that 50%, this is going to go lower. You know, these consecutive down candles, as you move up in time frame, is an order block. See that wick right there? If it's bullish, it's going to close above that midpoint. So you can already see, right? Sell side, buy side. So that's a balanced price range. Sell side, buy side. That should be a balanced price range. So it's like little blocks of price delivery, creating balanced price delivery. Okay. That's a very strong response. So again, that puts this as a potential candidate up here. I've already taken that. This is trend line liquidity. Dollar is going lower. So starting to lean more and more like more and more towards price offering buy side more. Okay, so that deep retracement, and I got a change in state in my momentum order block. Price trade into the upper portion. It's respecting it. I think we should be able to continue to get more momentum up there. Yeah, right there. I don't know why that wasn't on. Just beautifully tapped that upper portion. Again, if this not only would have broken through this, but closed below that first presented fair value gap, again, that would have offered a short position. So let's see what this is going to want to do here. Pretty strong rejection off this daily wick level. So now we got order block / breaker respected off of the other breaker. We have high, low, higher high. That should act as an order block, balanced price range. This fair value gap should act as a breakaway gap. Why? Because there's buy side and sell side already happening to the left of this fair value gap. There's no, is there a little piece that's available still? Yeah, very, very small. So it might want to swoop down a little bit more. But again, yeah, this is fully engaging the buy side, obviously. So yeah, we're coming back into the previous day's range in here. It's targeting the highs up there. So we can see that this breaker did play a pretty significant role. Was there SMT at these lows? No, if there was SMT at those lows, it would have been a little bit more conviction that this was going to go up. But again, given this huge decline, right, for the last 2 weeks, you got to be very cautious, right? Especially on CPI week and day. We had NFP last week and then CPI this week. So again, the market maker buy model's in effect, right? Like we talked about, all these red lines are just new day opening gaps, right? So just so you guys know, this is a accumulation in a potential buy model. We got first stage distribution. This is second stage. So that should be very quick to get us up above these equal highs. Assuming that it's going to get us up there. Okay. We got this regular trading hours gap from previous day. It's got a little bit of buy side, but we got pockets of a lack in buy side delivery. We got sell side delivery, buy side. So this little pocket here, but then the lower portion of that and the upper portion of that is inefficient to the buy side. So if this does run to the buy side, that's what the objective would be. Come and clean up all of that. Can also see this piece of the gap in there. You got sell side, buy side, sell side only, buy side, then sell side. So that little piece right there, if we do gravitate up there, it'll most likely want to look at that target in particular. It's also part of the lower regular trading hours gap from yesterday. So this blue, right? That's a new week opening gap. It's two of them on top of one another. See the darker spot? Then we got a bunch of new day opening gaps. So yeah. So there's nothing telling us shorts at the moment. It's going to have to do quite a bit to get us to think short. Let's go back to NASDAQ. Again, this was the accumulation. Whoops. We're above that inversion fair value gap we talked about. So it should really, really accelerate. We're also in the second stage distribution. So these highs up here should be easily achieved. Remember, we got buy side delivery, like I said, right? So this regular trading hours gap is still inefficient to the sell side. But for now, right, obviously, we're going to look for the equal highs up there. So yeah, watch the sensitivity to this upper portion of this reclaimed 2-hour fair value gap. That's a very strong reaction. Again, once it takes this high out, that puts this high potentially in the crosshairs. That's a type 2 dealing range from a weekly fair value gap. See, like I said, it should quickly get through that. Now we're finally in the macro, right? It did all of this before the macro. If this would have happened or started to happen more so in the macro, that would have been a chance for me to want to engage. But again, you're either going to have rules that you strictly follow, especially around these types of events. If it was a different day, right, a different week that didn't have CPI, NFP, FOMC, or any of those news events, or if they were like later in the week, it'd be a different story, right? This would have been something logical to engage. Still a little bit close to the open, but this is enough to confirm that this was not going to want to go lower unless this was to be violated. I wouldn't have taken a short in here in general. I would have wanted that secondary move there to then get into the short because of the chance of this happening, right? Inside that wick, it was showing pretty strong rejection, sympathy to that. So then again, this inversion fair value gap would have been the crux of a continuation down. But we'll see. If we get this, once it's taken this high up here, like I think it already just did, or it's almost about to. Right, if we get this to take this high and then we start to aggressively reprice back to this, the midpoint, then we will adjust and put this from the lens of market maker sell model. And then once it gets a little bit deeper into that, we'll look to try to position down in here. But we're not picking tops or bottoms. And, just being extra patient today. These moves happen outside of the rules, like I said. So again, you're either going to follow rules or you're not. You're either going to accept that or you're not. And at the end of the day, that means you're going to either succeed or you're not. So just the facts. Can't focus because of DXY. Yeah, DXY is not really doing much. See, that's another thing. The correlation's not really super obvious, right? I mean, the indices are kind of following what each other are doing, obviously. There's really no SMT anywhere to help deepen the justification for whatever it's doing. We got the Dow kind of stuck. We are in a range. No matter how aggressive this has been, it's still range bound. Until we break out of that range, that's still going to be the case. I mean, that's the thing. We have an inside day as well. We're coming off of a fast-paced day yesterday. So the expectation is today's going to be a little more tricky, right? And it's CPI all day, the rest of the week, right? It's still CPI conditions. Appreciate you saying that, Tony. I would have to agree. You saw the Razor model, Byron? Oh yeah, right there. Oh wait, what? Yeah, there's a little fair value gap in there. Stop run. Run right up above that. That was a Razor model with the breaker. This one too, yeah. Fair value gap. Broke down. We'll see if that can give us that acceleration We need dollar to not be an indecision candle. That's a very, very untrustworthy behavior right there. Let's see what this does here. Again, if it's bullish, we're going to respect the midpoint of this, the upper 25% preferably. We have a low, high, lower low. This should act as a breaker. If it doesn't, and we see something like this, that right there can be used as an inverted breaker. And then if we do something like this, that would be something logical to then take it back above these highs. I don't like that we are just leaving these highs available here. I really don't like that. We have SMT actually at the highs here. Higher high, higher high. The Dow has a lower high. So yeah, that may result in this becoming, again, the market maker sell model. If this breaks down, right, this is accumulation. If we can get this to get down below this candle's low, we can utilize this as a very sensitive price point, and then get it to offer us that short idea. And we could target this for a market maker sell model. But yeah, we need to see it get up here if we're going to trust buys still. Obviously, dollar's kind of useless right now, so we can't use that to help justify. If it gets up above here and then returns into it, right, that could potentially be something that gets us up into here. But if this was to break down and get down below this level, these are the two areas in price that I'm going to be looking for an opportunity, right? Because price is, you know, kind of wild, right? It could run up and take these highs. It could fail because of the overall narrative and then push it going lower. And the fact that we're in a range, right, with not really much correlation to go off of. You got to have contingency plans, you know. So whichever level it wants to reach into, that's going to be what I'm going to determine from my execution today, right? Doesn't always happen this way, but you got to know when things are a little bit foggy, you got to be able to build a sentiment for both sides. You have to understand what's going to happen, or just don't trade. Either be flexible or don't trade, right? And just watch price. Because most of the time, if you try to force a narrative or a bias without being flexible, not accepting that you may be wrong for one of your ideas, you will blow your account. You will lose more than you want to lose. And if you can't accept taking one loss and you're going to be upset about it, you might as well not trade on these types of news events, like at all. Because these are the days and weeks, like NFP, FOMC, CPI rate announcements, Fed speeches. Those are the days that if you overtrade and over leverage, you will be absolutely removed. And I'm sure you guys have witnessed that yourselves. You know, it's a known fact. But yeah, up to this point, there's nothing going against this continuing to go higher towards our objective up here. We have a low, high, potential lower low. If it breaks that, that's a breaker. That could be an aggressive idea to go short if it was to break that. But again, I'm watching to see if we can't get those equal highs. We're so close. I think this breaker, low, high, lower low, breaking up above that and then returning into it, respecting it, and then sending price through, say, an order block, I think that would be a very justified, logical way to get in position to then take this up to the highs up there. Right? It's kind of peaked above it a little bit. Got that little return into that. I don't like that we didn't really close outside of it with this order block. I would have much rather seen this close above it than come back down. If this was equal lows down here, there would be even more conviction. It'd be a lot easier to trust, like, okay, this short will probably happen up at these highs. Those equal lows are available, but this took the stops. So you can't really say that work hasn't been done down there, because it has. Go to the 2-minute chart. Do got a fair value gap in here. If we get a closure outside of this, that confirms this as an inversion. Yeah, I got a lot of alerts going off for my stocks I'm looking to trade options on. CG. Okay. So yeah, watch for a closure outside of this inversion here. If it closes outside of it, it's going to go up through these highs. If it can't and it breaks down through this, any return into that, in my opinion, is going to offer a short. You can just make a narrative for both sides. Is that high probability or low probability? Right? The narratives make sense that we could paint for both sides. So, you know, you got to wait for one or the other to unfold. Because if you just execute here, just assuming without waiting for these particular things, what are you able to trust? If you can't trust enough in your setup, and it's not blatantly obvious where it's going, you're gambling. Okay, so that right there, that's a pretty nice reaction there on the 2-minute. So yeah, we're going to watch this low here. We got an early breakdown right there. It's respecting that. See the closures, how prices closing below. We're respecting that. So we ran up. I would have much rather seen it take the highs up there first before it looks to decline like this. But again, we have buy side and sell side delivery. That's all balanced. So we prefer that it doesn't. If we're going to go short, we prefer that it does not take this high out, because that should act as an intermediate term high if it's going to go lower. But I mean, look at this. It's just up and down like that. Okay, so the S&P does have a closure above that. So that may give it the conviction to try to get up to these equal highs up here. Okay, we've got the NASDAQ. Okay, we're coming back into this order block. Let's watch that order block. If this creates an order block in here, the next candle that drops, if it can send a wick into this lower one, that'll be classified as a propulsion block. Look at that response there. I like this low right here to be, when it's taken, I want to see what that's going to do. Again, another thing that's kind of going against us in terms of the conditions, what may result in, you know, less favorable conditions, is the fact that we're a week. Yeah, I guess it's like exactly a week before the quarterly rollover. If this goes higher, I would like to see this fail to break that low, or at least one of the averages to fail, like S&P, for example. That's a good one to see fail and then go higher. If the NASDAQ sweeps this, if the NASDAQ sweeps the low and the S&P gives a failure swing and then it breaks through to the buy side, again, the justification we would have there would be S&T at the PD array below us. I do see that the dollar is still respecting this level in here. Still hasn't closed below the level that I said would justify further downside in the dollar. We got the 30-year yield. It's kind of a shit show. Looks like the indices are starting to reach okay. So yeah, this has to act as an order block if it's going to be trustworthy to go lower. This high being broken becomes a bullish breaker, by the way. This right here. And again, because there's unfinished business up here, it hasn't taken those highs. If we can keep seeing dollar decline, we haven't swept those lows. We set equal lows right there. So yeah, breaking up above this, we have a fair value gap plus low, high, lower low that breaks the high up there. that would be a bullish breaker. So getting up above that, sending price down into that should be enough to get us up to the highs up there to complete that market maker buy model. Again, very risky because, again, balanced price range here, large range previous day. So again, any entries you take, you only have 2 bullets, and both those bullets need to be low risk. Okay, so now we're watching that fair value gap. If it closes outside of that, that's an inversion as well. Okay, watching this right here. We just need a wick to shoot down into that. And we do not want to see this get overtaken. If it gets overtaken, then it's just not a worthy trade setup. Let's see what happens here. Very, very soft. It still hasn't closed outside of that inversion. Gives me some pause, a little bit of pause right there. So yeah, not yet. Still haven't pulled the trigger yet. Oh wow, we got SMT now at the highs. That's interesting. So yeah, because we have that SMT, I'm definitely going to need to wait a little bit. Look at that beautiful wick response right there. Upper 25%. Isn't that amazing? This one too. Again, we have our new 4-hour candle, so think power 3, right? What's the current 4-hour candle look like? Right, it looks like that, right? It's went up a little bit, went down a little bit, kind of indecisive. If we flip around, we got, again, SMT at these highs. This may just simply be a stopper. You notice how it never got outside of that inversion fair value gap upper portion? It never closed outside of it. So has it confirmed it as an inversion yet? Nope. So yeah, watch the low of this here. We have a low, high, lower low if it breaks that. We have a high, low, failure swing, mitigation block here, and a breaker nested inside that mitigation block if it was to get down through that. Again, the reason that there's pause in this scenario is we have not taken that out, and we're not able to use that as an inversion yet. Because the SMT is present, this could very easily fail and go lower. So yeah, you notice the regular trading hours gap in here? We got buy side, sell side, buy side, sell side, buy side, sell side, buy side. Okay, now we're getting outside of that. It's refusing to get on a closing basis for now. We'll see how long-lived this SMT is. Again, it looks like it's going to get up there. It's just taking a minute. Look at that 15-minute here. Wait a minute. That 8-minute, you see that clear fair value gap. I highly doubt they're going to leave these available. Highly doubt it. Okay, it sure is not wanting to get outside of this inversion. If we would have already got outside of that and we started to come back, that would have already been enough for me to think, okay, it's going to get up there. Well, with the SMT and the refusal to get outside of that, it's not trustworthy enough for me to put my money behind or call out as a trade setup. The S&P offered to move up there. If you trade the S&P, because price closed outside of this here, you know, that's a reasonable idea to try to get up there. This is a protected low in here. Again, things should fall in line. It should follow what its sisters are doing. It's the six sister approach. So yeah, we'll see what it wants to do with that. Very, very slow to get up there. Dow's like not even close. Oh, I guess it's a little bit close. So now the S&P has a order block there. Okay, so now we're starting to get outside of it. Okay, now it's more trustworthy. If we can get a closure, if it closes and shoots a wick back inside that, it's already confirmed as a inversion. Okay, so let's see. Okay, so now you see the SMT kicked in. We need a candle to shoot down into that, so it can offer us something up there. If it can't do that, then there's nothing we could do about it. Risk to reward has to be a little bit bigger than I'd like. I'd like to get us down below that. At a minimum, below that midpoint. I really don't like that SMT. Dollar's kind of sketch. So yeah, it's a little uneasy in here. Obvious clear target is up there. See if we can get it to go up there real quick. Dollar's not really showing much weakness to help support the idea. Again, that SMT is very, very risky. So we'll see. Oh, all right. So that was a quick stop out right there. 32 points. Again, I would have liked to put it down here, but I'm just not willing to risk 70, 80 points. It's not worth it. It's just really not. Like the better idea may offer here if it is going to get up there. Wasn't sure if it was going to want to come back down into that. It's already so close. When you're so close to a level like that it's already taken forever to get up there. Many times, once it's ready to go, we're still in a macro, right? But because it's so close, once it's ready to go, a lot of times it'll just shoot up there real quick, especially when it's taken time already to get to where it's at. Yeah, I still believe that this should be able to get up there. I don't like the risk to reward. I don't like the risk to reward. So I'll take that small 30-point loss, 32 points. Had to stop right there at the midpoint. Obviously, it just slightly took it out. So if I would add like a little bit larger, would have been cool. But again, this is a good example of a time when it's like a little bit iffy. Little iffy. It's probably best to wait it out. Waiting it out obviously sent price down, offering a better opportunity here. Now it's already delivered into that. This should be a fast move. So now it's above that high. This order block needs to hold, right? If it's going to look to get up there. Right now, if you look at this one, 50% of the order block. That's what I would have liked on the previous one. Because if it's bullish and this order block's going to hold, again, midpoint being respected. Right? Respected. I guess it's kind of shot through it a little bit. But yeah, this should be able to shoot up here. Let's see what's happening with the other ones. Still got a little bit of the gap it can go into. And I'm not just going to go right back in. I already took a trade. It already got stopped out. So I'm going to give it a little bit of time. See, it's the right choice to not go back in. It's very high resistance to try to get up there for whatever reason. We got equal highs. Well, not for whatever reason, right? We're trading into that balanced price range, right? Overall, it's been going lower. So this run, yes, it's went higher, right? Yes, it has went through to the buy side, but it's still underlying going lower, right? It's still refusing to really get in line with the bullishness in a low resistance capacity. How do you know it's high resistance? Well, look at all the retracements. Look at the consolidation, how slow it's being pushed up into these very obvious levels. Look at how deep the retracement is. That's a deep retracement. Deep retracement, deep retracement. Well, all the way down below the low. Deep retracement. Very slow, lethargic run up. This is high resistance. So yeah, we'll see what happens. The only way that I'll look to even consider that short ideas would be back on the table is if we were to break down below this low. Otherwise, I have my attention up here. It's very reluctant to get up there. We had SMT, but we still have SMT. So that may result in this looking to try to go lower. It may leave these highs. Again, structurally, it hasn't broken things that guarantee or close to guarantee that we're going to go up, right? Off the heels of this huge decline the last 2 weeks. You know, there's really nothing that's really changed overall, right? What's led to this decline? The war happened and we're still in the war and all that. It's like actively bombs are being dropped. And we still got all the chaotic stuff going on. So, right, so now we got this displacement. Again, if this was equal lows in here, it'd be much, much easier to target that. But because it's not, it's got a stop run already, we may see something like this unfold, the characteristics. I mean, you could feel the high resistance behavior in here. You could just feel it, right? When you're looking for a level, it tags it, barely moves away, or you're looking for it to hit your level and it takes forever to hit your level, or you're targeting something and it just like refuses to just go up there, right? Or down there. We have a large wick here followed by displacement. If this is going to go lower, it's going to stay below this level here. We have a new day opening gap here and a new week opening gap. We're at the upper portion of the regular trading hours gap. So let's see what that does. I'm not interested in taking an idea at the moment. Okay, well, gonna respect that inversion. Still holding in that inversion level. Got another order block there. Very, very lackluster responses from these order blocks. It still seems like it wants to get up there. It's trying to get up there. It's just fighting it. That's why we don't be aggressive, right? But the currencies haven't done anything. Dollar's still respecting that upper level. This right here, doing this, if this continues, again, it's supporting price getting up into this level. We have a retracement into a fair value gap after it's been bullish. It looks like it wants to go higher. We got a cracking correlation with the yields, right? Some are going up. The 30 years going lower. We got the bonds going higher. That supports lower dollar, higher currencies, higher indices. So we got that going for this to target the highs up here. It's really not doing much of anything. It's kind of what was to be expected today. I mean, it offered some stuff early on, right? We talked about the breaker in there, talked about how it was outside of the rules, but still delivered, right? We talked about this area, came down into it, traded as a BPR. We have balanced price range in here. We have accumulation, manipulation, distribution higher. If you want to kind of break down this piece of the fractal in there. And after this huge run like that, right, you want to expect small ranges. You don't want to go in and chase it going short, right? That's why we haven't been aggressive this morning, like pointing out like this and that. Point out a couple ideas. Talked about an initial short down in here, using this low to that high. Once it breaks down below it as a breaker, that offered 65 points using that perspective. Again, outside of the rules. It's not close enough to a macro. And then we talked about how this gets, if this gets violated, when price breaks that high, should act as a breaker, right? If you immediately use that to then target the highs up here, once it got above that closing price and the open of that candle, right, those equal levels, that's enough to take an execution. That went over 60 points. The retracement into this, if you waited to see this, because like we said, if that midpoint got violated, we'd wait for this to be targeted and then go short. But if you waited for that to deliver, this was closer to a macro, right? I mean, I guess this could be somewhat considered a missed opportunity, I guess. It's like 2 or 3 minutes before the macro. But I mean, look at how it's set up. We talked about how when this type of stuff happens, if you're unsure or if the breaker gets traded deeply into it, you want to wait for a change in state of delivery and then watch that confirm that change in state by trading into it, respecting it, and then start running, right? So that could have been a potential execution within the rules. So I guess that's a missed opportunity. That's fine. But we mentioned all this. We talked about it, right? And then price went right up into a level that we identified, right? But again, the risk of today, right? Risk of this going up, taking the stops and then rejecting, continuing the downside, that risk is there. This idea isn't unorthodox. We had a heavy previous day, and it's coming back to clean that up a little bit, right? Still reluctant to get up to the extreme up here. It's really doing nothing at this point. So again, you want to wait for macro. You know, we do still have this inversion in here from the 2 minute, right? Like we talked about, we needed to see it close above that inversion in order for us to validate that it's actually something worth watching. And then ever since then, it just really hasn't done much, right? Once it closed above, right, you could have executed this area in here. We did that. I shouted it out, executed it. 30-point stop below the midpoint of that inversion because I expected it to be a little faster to try to get up there because it's taken so long. But looking in hindsight, right, it didn't go. So it's a good thing that we have the rules where if we take a loss, we don't go back in, because it would have been a 2 trade loss rather than 1 trade loss if I didn't have the rules. Yo, good morning. Hi, Mont. Maddie, possibly. We'll see. I'm not necessarily too interested in this. I do still believe that this should hold and then get us up to the highs up here. It's taken forever. You know, who knows how long it's going to take before it does get up there. We do have the dollar creating a pretty nasty wick right there. Remember, that's inside of that fair value gap. So So it still looks like it wants to respect that low. If that's the case, at some point, this will turn around and go lower. But for now, right, we got the Dow trading from a bullish breaker. We have this respecting this down movement, up movement as a balanced price range. We got relative equal highs here, and then we have that secondary layer, relative equal highs up here too. We got the S&P also respecting that order block. We got this high, low, higher high being respected. So it's all marching higher. Nothing's upset that fact. Oh yeah, now it's opening up. Okay, so now, as we mentioned, there's no reason to take a short, no reason to think short. I wanted this move right here in this order block when it came, down into it. I didn't want it to go to that midpoint. If I would have been able to miss the stop right there, if I would have kept my stop a little bit bigger, it would have offered the 20 to 30 points we were looking for. 60 points before it really turned. But yeah, now we're about to hit that target. So yeah, now target has been met. So again, like I said, because we were above this inversion in here, there's really no reason to think that it was not going to go and target the highs. The only issue we had was it was taking forever, right? We did have this missed opportunity in here, but it was just taking forever, right? And if we would have engaged quickly, right? Say we, when we got stopped out here, if we would have engaged again, it would have taken us out again versus waiting, seeing this. I mean, this is reasonable too in here. But given how slow it's going, again, you gotta be honest about the trust that you have in a particular idea. For me personally, maybe it's different for you, but for me personally, this idea, because it was taking so long, it's too risky, especially with this down movement. For me, things just didn't align properly, and we're now outside the macro by 15 minutes, right? If it's 5 minutes over the macro, okay, that's acceptable. But once we get deeper into it, especially when it's like really, really slow, and on top of that, it's CPI week, CPI day specifically, this is characteristic of that. Was there opportunity in here? Yeah, there was, right? I would have had to bend the rules a little bit, not trade in the macros, because I would open up this opportunity, right? And this one too. And we'll go to that 30-second chart. The breaker in there, that short idea in there, right? When it broke down, had relative equal lows there. Price came right to this fair value gap, right? That little move right there is 65 points. All right, we talked about that. We have that stutter candle, consecutive down candles. You go from that stutter candle, drag it over, you see that was the actual change in state of delivery that then pushed price through to the buy side. So from this point on, right, it's justified to attack the buy side. And then, of course, we have high, low, higher high. It's a bullish breaker. We have stop run, displacement, change in state of delivery, or shift in market structure, rather. Fair value gap, so YouTube 2022 model. And we have stop run, displacement, fair value gap. It's a breaker, but it's also the 2022 model. So you can kind of see how like breakers and some of the other models bring you to a very similar place. So that's why you really only need one model, because most of the time, one model is going to be showing up inside of another model, and it's going to bring you to a very similar place, right? So whichever perspective you had, obviously there was some opportunity. Again, the best opportunity was this one, in my opinion. It was definitely a missed opportunity with that shift or change in state above this after the respect to that breaker. A little bit more risky here because it it could have very easily blew that out given how aggressively bearish it's been. And this was also inside the inversion fair value gap, the lower portion of it. But once it left that, we have a stutter candle in here, consecutive down candles. You can see that right there was where the change in state was, and it was off to the races. By stutter candle, I mean this candle here. See that stutter right there, consecutive candles, stutter, consecutive candles. Gets above it, respects that candle. That's not random, right? Gets above it, comes back down, specifically respects that area. Yeah, there's a fair value gap too, but look at how it respected it there, and then also respected it here, right? Look at the stutter candle here. Drag it over, respected it. That's a change in state of delivery. It's not always going to have that stutter candle, but when it does, this is something that no one talks about, right? It's something that nobody knows. Like they don't use it because they maybe didn't notice it, but that's a little signature about change in state of delivery that I've noticed over the years that's very consistent. So keep your eyes out for this type of stuff. Stutter candle, consecutive candles that take stops, and then once it breaks above it, start watching that level and see how respected it is. Because that can also be utilized as an entry. Just that simple little stutter candle in the change in state of delivery. Oh, the razor right here, huh? See, this is also a breaker, right? High, low. If we break above that high, it should respect it if it's going to keep going up. See, look at this. So that is a balanced price range. I'm going to visually paint the importance of BPRs and how they have like building blocks. It builds little blocks of price delivery that once it leaves it should be respected. Midpoint, midpoint. Okay. With this retracement, if it was to get above it, midpoint. Right? You see how it treats that? High, low, higher high, upper 25% being respected. High, low, higher high, upper 25 being respected if we're bullish. Okay, so when you see displacement, retracement, and then price breaks that previous retracement, this is visually what you want to be thinking about. Okay? This is something that I used to do constantly when I was first starting out, to just familiarize myself with BPRs and how price references other previous ranges in the same price leg, and how I can use that to help walk along where the best opportunities reside. Many times it's in that lower portion of the current retracement, but then also in the upper portion of the previous one. Okay, upper 25% in particular. So let's see what it wants to do here. Keep in mind, higher time frame wise, we've had a nasty decline. It's going to take this getting up into this level up here for us to really confirm the buy side is going to be overwhelming and still make all-time highs. We have a high, low, failure swing. If it's going to sell, it's going to sell from here. We have stutter candle, consecutive up candles, change in state. If it's going to sell, it shouldn't even come up into there. Right? Preferably, we could see this stutter candle respected. But we have this high, low, high, right? That's a failure swing, mitigation block. If it's going to short, right? This little area in there should be very sensitive. And if that fails, guess what? It breaks this high, comes back down, creates a bullish breaker, and then we could look to see it go up. But again, in my opinion, it can do really either thing. We have taken stops here, so, maybe it starts to get excited to the downside again, but, we've really wanted to meet some of the buy side. So I wouldn't be surprised if it gets up here and then continues. But this is something to watch. Okay, stutter candle, consecutive down candles, taking a stop. If it gets above that, that changes state. If it respects it, it's going to continue to go lower. Simple as that. So yeah, does everything I've talked about make sense, you guys? Let me know in the chat. Throw a 1 in the chat. Byron said they took higher time frame liquidity. Yeah, it's true. It's these highs up here. What time was that? That was... Oh. Is that Asia's high? Yeah. Yeah, that's Asia's high. I didn't even realize that. So it seems like we have had a London swing to New York reversal profile. London swing, right? London swung towards the daily wick. That daily wick then led to a change in state of delivery. You see the stutter candle effect in here. Consecutive down candles. Takes that low. Price gets above that stutter candle. What does it do? Comes right back into that stutter candle and then runs higher. So yeah, price is still continuing now. So we now change state. So any short ideas would have to be put on pause. Any return back down into this, we should be able to continue to see a drive up to the buy side. You know, how do we get like a reasonable target to project? Well, from this low to that high, let's get a measurement. 2.5 standard deviation. Could see price get up into that level. What is that? Oh, that's the breaker. Utilize that lower portion. It's coming up into a bearish breaker here. So yeah, this is wild. Super wild. It's not fully interested in doing one side or the other. It went lower, of course, but now it's coming all the way back. So very, very risky environment. You got to know what you're doing. You have to manage risk. If you take a loss, stop. Got this order block moving. You know, now that we're inside this high, I definitely want to see how it's going to treat that. Because if it is going to go higher, we have this high to that low. That's now a balanced price range. So if it returns into it, it's going to have to respect that upper level. Preferably from this low up to that high. The upper 25%. So we should not come back down into this. So yeah, like I said too earlier, this was a buy model. So it did in fact complete the market maker buy model. Second stage distribution wasn't very second stage distribution-y, right? It wasn't very quick to get up through the highs. It took forever. So it was unorthodox type of delivery to take out these highs up here. If it was going to be, you know, the fast-paced move that second stage generally presents us with, the idea that we talked about close to these highs that did end up getting stopped out 32 points, it probably would have went through the highs a lot more reliably. Yeah, so now we're just sitting here watching this. Definitely not very much in a hurry here. We do have trend line liquidity. This line is depicting SMT. We have relative equal lows there. That's kind of interesting for the S&P. Seems like everything has now taken the stops except the Dow. I like the Dow's bearishness there. We got bearish SMT. Okay, so let's see this because again, we've taken liquidity. There is a sentiment to go lower. So now we got this. So that's going to be now confirmed as an inversion fair value gap. So if we return into that, I will be willing to take a short. All we need is a tap into that low, the lower portion of the inversion fair value gap there in the 1 minute. See if we can get it. Ay, ay, ay. Tap my limit order. All it's got to do is just simply tap the limit order. I like the stop run, but I would not want to see a very deep retracement. Okay. So tapped it. See if we can't get that to hold up. So again, because I took a loss earlier, this trade is at half the risk that the other one was at. This is a confirmed inversion fair value gap here because we closed below it after a stop run. So it should be pretty reliable if we are going to look to go lower. If the dollar can keep this wick lower going higher. See if we can get that to open up a little bit. So we're getting closer to the macro. Again, I like this inversion. I like that we took the Asia highs. But we'll see what happens. I don't like the reaction here. I don't like how it's stalling out. We like fast moves away. The longer it spends in there, the less likely it is to hold. Yeah, now that we're outside of it, I'm going to save the stop. Okay, so stop out was at 190. Sheesh. See, is this still going to go? If we get down below this, it'd be reasonable. It'd be reasonable, depending on how it breaks that, for that to be an idea to piggyback off of that. I probably shouldn't have saved the stop. It was right up here. Let's see, what would that have been? Yeah, no, that was 44. Half risk. I mean, I probably could have kept the stop open a little bit more. Let's see what happens. If this displaces through that, gives a wick into that, I'll put one more half risk entry in there, but that'll be it. Yeah, if this just flies off the handle to the buy side, I'm not going to be interested. I want to see if we can't clean some of this up. I like that we took the stops up here. Wouldn't mind pairing these buy orders, right, the buy stops, with the short to come and take out this trend line liquidity for anyone that's winning. Who's winning right now, right? It's the people that are in this move here, right? Or people that are up here. I think this is a very logical area to be attacked. Again, we do still have a chance to get through this level and just back inside of this. Again, if this pulls back into the range, we're pretty much range bound. So again, okay, so I wanted to get outside of it a little bit. Yeah, see, it's above that new day opening gap and the new week opening gap. Let's see, breaking through this little level here, that'd make the confidence for it to target a little bit deeper, a little bit stronger. Yeah, you see how slow, how long it's taking? It's just like lagging, bro. Laggy. But see, I take losses too, right? You can't win every single day, right? We win a lot, right? We're correct a lot. But being correct doesn't result in profitability. You know, it's how you manage times when you make the wrong decision. Like this, if this was me 5 years ago when I first started and I take a loss like this, I'd be salty as hell. And then I'd be trying to get back in, right? And then I'd be so scared that I'd get stopped out again, right? And it would just be a shit show. And then the rest of the week, I'd be pissed off. Like, oh, I could have caught this, could have caught that. But it's just like, chill. If you take a loss, you know, it's okay. Get it back tomorrow, right? Get it back next week, right? You don't gotta make every idea a life and death idea. You know what I mean? It doesn't have to be dramatic every single time. That was a beautiful run. Sheesh. Not gonna lie, I flipped to my AMP account. I was gonna trade my personal account. And let's take it off there. Okay, so here is my AMP Live account. Pull that up for y'all. AMP Live. Whoa. Come on. So AMP Live account. 135 points. Not bad. Not bad. 2 small losses in my funded account with Tradeify, Tradeabate. And then this third one, because I'm composed, right? This execution was a little bit higher than my Tradeify execution, which was right at the low there. This one was up at the midpoint. A 35-point stop. Almost took me out on this one too, but the difference is massive when it comes to precision. You could just be a couple of ticks away and it's like you could be stopped out. Or it could be a couple of ticks larger than you would like it to be for your stop, and then you won't take the trade, right? So it's very nuanced. And this is one of the harder, more difficult things about trading is positioning and risk management. If you're going to have a bigger stop loss, you have to have lower risk. Nobody knows what that risk is for you. Only you know. Can you handle 5 contracts? Can you handle 2? Can your account handle 2 to 5 contracts? Right? Like it's these factors are very, very significant when it comes to risk. But obviously that inversion fair value gap, like we said, that inversion fair value gap delivered like we said it would. Nothing in here really got me away from thinking that it wasn't going to go down through that. It did trade outside of it a little bit there. It's a little bit skeptical, but then this came right back down. So that was enough to solidify. And if an execution was not taken there, I literally told you guys, if it breaks through that and it comes back into it, you should be able to get offered another run lower, right? So just that right there in itself was 100 points. let alone the trade up here, right? I could have honestly pulled up my Tradeify account too, and then took that and then made it back. But I have my personal account. I like using I switched to my funded account when it's more risky. But even in my more risky accounts, I don't push too aggressively. I'll still have 1 to 2 trades. Never gonna go over it. It's just not worth it. Damn. Yo, Byron. What are you saying, Byron? Yeah, patience for sure, bro. Yeah, it's all about strategy, how you manage your money, how you manage your accounts. You know what I mean? Like it's good to have multiple accounts just in case. You don't want to push too aggressively, right? In one account. You want to have let each account have its own role to play. And yeah, right. One could be compounding, one can be cash flow, one could be aggressive, one can be conservative, right? One could be about income, one could be, well, I think I just said that. One could be about income, one could be about cash flow or compounding. Just depends on how you want to structure everything, right? But yeah, this trend line liquidity, like I told you guys up here, that inversion, it took stops. We got this breakdown. Uh, excuse me. One thing you want to consider about inversion fair value gaps is that's a type of change in state of delivery. Okay. When it gets traded through, right, this overall view in here, this lower portion, that is the full change in state. You could look at this early aggressive one being this last candle prior to the down move after the stop run, right? That's an aggressive perspective, right? Many times it works if you're correct on narrative and that draw on liquidity that got swept or that liquidity pool that got swept and reacted away from. If you get a strong response away from it, that reinforces how likely this is to hold as well, right? You notice how it came right into that order block. But once it closes below that inversion in there, when it comes back into it, you expect the price is going to continue to go lower. Okay. Those of you that are in my private group, right, you guys know, right, this is our razor model too in here. Okay. On top of just the simple fact that the inversion is there. The latter, more conservative view, right, that fully confirms with order flow confirmed, it's showing up in price as well. So again, whether you took a trade in here, maybe you let it go a little bit deeper, or if you chose to take a trade down here, right, after we had this breakdown, either perspective, right, there's 2 opportunities in there. And honestly, there's a third in here as well. It's a breaker. Low, high, lower, low. Stop run, inversion fair value gap, closure confirmed, order block confirmed as well. Change in state. One change in state, second change in state, and breaker. Okay, so all of them offered 100 points. Think about it. 100 points from here, 100 points from here, and from here down, targeting the lows down there, 100 points there as well. Okay? This is an example of why it doesn't really matter early on if you miss a move. If we would have sat here and thought, oh, I missed this move, I missed this move, I missed whatever other move, I took a loss here and got frustrated and upset and was like flipping the hell out as if the 1 trade setup or 2 trade setups you see in price are the only setups that you'll ever see. If you think that way, you're not going to be afforded this opportunity to find stuff like this. And this was in a macro, this breaker idea here. Even this, right? It's somewhat close to the macro. But this right here fits the macro delivery perfectly, 745. So this right here is the best entry, following the rules. Puts you right when the setup's going to unfold. Does it do this every time? No. But you want to trade around macros. You want to. If you miss a move, let it go. Okay, if you take a loss, let it go. Did I sound flustered to you when I took the loss? How about the second one? Did I sound flustered? Think about it. Both trades that resulted in losses were 32 and 33 points. That's what, 65. Okay. I just captured 113 points, right? 113 point run. Okay. From the execution I showed you a second ago. So I am in the green 40 points. Okay. About 40 points. So with that being the case, did those two losses really mean anything? No, they're annoying, but we're in a condition where it is what it is, right? You're going to take losses, and you got to learn to just get over it. And if you don't, this isn't going to be fun for you. And you want this to be fun. You don't want to lose the passion and have this like irritating like a job, right? Or worse, something that damages your mental health, your self-worth, all that stuff. You don't want it to be that way. You don't want it to get to that point. It doesn't have to be that way. It could be fun forever. But it's all about the battle that goes on in between your heads. Damn, Byron, you hit 3 trades today. Perfect. I mean, I can't say I'm surprised, bro. Come on, bro. I can't say I'm surprised. Freaking Byron, bro. That's to be expected, bro. I expect that, bro. See, did I miss any questions, you guys? Yeah, I think that's enough for today in terms of engagements. We talked about the moves over here, right? Talked about all the stuff going up into that area up there. You notice how it took forever to get up there, but once it got up there, it's now quickly kicked back in line with the narrative. Just like how yesterday took the stops up here and immediately broke down. Seems like that's what's going to happen here after it took the stops up here. Did we breach the 50% of this? No, from this low to that high. No. So does that upset the downside delivery, the sell side interest? Wow. Here's another setup just like yesterday that I should have held. What a freaking mess. It is what it is. We do this every day. Literally yesterday we got a good trade. Today we got good trades. Yeah, Maddie, the intuition that you said or pointed out earlier is the real setup forming. You were thinking correct. Was that you? Yeah, you said that earlier. So you were right, bro. What you were feeling was right. Look at that. Bang. This is now a market maker sell model. So you remember what I said earlier? This low? If price can get down below that, we should be able to see some pretty aggressive price delivery from that. And we got our 2.5 standard deviation. Look how perfect that is. Sheesh. Ba-da-ba-ba-ba. Yeah, it was very, very slow, very suspect. But nonetheless, you see what happens when you take out significant liquidity? What liquidity is Asia's high? Based on the liquidity mapping list. What liquidity is that? What is it categorized as? Let me know in the chat. Should be an easy question. Yeah, look at that. Okay, now that we're below this, it should be very sensitive. We should not get any real attempt to get into here. right? I mean, you could go extra ballsy, something like that. Stop above that. I'm not encouraging you to take this trade. I'm just saying study this. See if we can't get a rapid move down below those lows. It's relatively equal here. Look at that. Right from that 50%. See if it can't deliver. It's in the macro right now, so I would not be shocked. We have buy side, sell side delivery. If this is going to be reliable, preferably we see this lower last candle, because it's a sell model. This is the previous accumulation. That previous accumulation, lower 25%, should be respected. Unless, of course, it's going to consolidate. Because if it does consolidate and we don't get that straight shooter down below, we may end up seeing price dance around. Yeah. With this example, I want to try to drive home the point. When price overtakes a previous accumulation, you need to pay attention to that lower 25%. Let's see how that looks. So we're not getting the fast-paced move. Let's see. It's going to have to move right here with this wick. Again, there is a risk of it consolidating. I don't believe this is really necessary because we have buy side, sell side already. This balanced out whatever was inefficient in that area with that displacement. Again, unless it's going to consolidate, right? Then if that's the case, it'll come all the way up there. Yeah, Maddie, that's what I was trying to get you guys to answer. It's a session liquidity. And what do you know? I was correct again, huh? Wow. I must be just lucky, huh? Yesterday and today and last week and every other day. With those of you in my private group, man, we must be like just the most lucky individuals on the planet, aside from ICT himself. Like that alone right there, 60 points, 70 points. And that'd be enough. You don't require this to be taken out. That right there, that's enough. 50% of the candle there, that accumulation, that's enough. And at that point, who cares if it runs all the way back? You got your 60 points. That's all we're looking for. We don't have to be the ones that tag the hugest runs. We need to be able to focus on income focused trading. Unless you have other goals, right? Then, it is what it is. But this is my view. This is my perspective. And that's the lens that I share my information from. That right there is enough. Okay, turned around. Great. I would have been out of the trade already, right? Just like I was here. And yesterday. So there was 100. Let me see. 50. See, 112. It was 50 that I exited. Is it 112? Yeah, 112 and some change. And then yesterday's was 93 points. So just in these last 2 days, 200 points. The move yesterday was 1,600 points. That's crazy. The opportunity was nuts. I had many students capture the larger portion of the move than I did, right? Like Jen caught a bigger portion of that huge move that we called out before the fact. Yeah, you notice the similarity in characteristics here. Price takes a large time frame stop run, and then going into 7 a.m., it declines aggressively. Okay. Price takes these equal highs, right? Relative equal highs, creates a market maker buy model to do it. It's session high. It's Asia's high. Okay. It's actually previous AM sessions high. Price came up, swept it. Look at the time down at the bottom of the screen. It says 7 a.m., right? This drop also happened 7 a.m. I'm telling you, there's something about that 7 a.m. time that you should investigate. Yeah, so we got this big one, Jen, that was pretty beautiful. Worked out like we said it would. And then we talked about this little one in here, wanting to see the lower 25% if it was going to be accelerating aggressively. Wanted to see it try to blow that out. But even if we just execute it right in here, like I was talking about real time, that's already 70 points. And that's more than enough. So between the 113 point run, which has now turned into another 300-point run, right? I mean, just between the setups that I've given yesterday and today, the point opportunity, look at that, 328. Yesterday, we literally picked the top real time and we're in the trade, right? Navigating it live. And it ended up running 1600 points. So if we would have held, the opportunity was 1600 now plus 328. So that's almost 2000 points given from ideas that we've shared in terms of the opportunity that's available, right? And us being on the right side of the market, right? Trading with what we're talking about offered over almost over 2000 points just in these 2 days. I mean, that's insane, right? I think that's pretty insane. Not typical, obviously. 1600 handles is like really insane, but hey, sometimes you catch a tiger by the tail. Yeah, so this retracement in here, if it breaks this low, again, that's another bearish breaker. So if it breaks that, comes back into it, that'll be another reason to try to punch another short going down. But yeah, so I guess I'll leave it here with you guys. Thank you guys for hopping on, as always. We'll be live again one more time for this week tomorrow. And then we'll be back to our regular schedule after that, Sundays and Tuesdays here on YouTube, and then every day in my private group, as it's been. But again, every single month we're going to do this, okay, where I'm going to be live with you guys basically the whole entire week, once a month. Okay, so 1 week out of every month. Sometimes it'll be the second week, sometimes it'll be the third week, depending on what the overall monthly range and conditions look like. Like we clearly picked the right week to go live every day. I mean, it's been pretty spectacular last couple of weeks, to be honest. This whole year has been spectacular. We're on track to beat out everything that we did last year, definitely beating out everything that we've done throughout, just the whole time I've been public. So it's pretty spectacular. And I appreciate having you guys here to witness it. And I hope you guys are getting value. And if you have gotten value, please don't forget to like the video, subscribe to the channel, share this channel with anyone that you think can benefit from it, or anyone that you think can also provide or add value to the chat, right? Those types of people are welcome as well. Great minds think alike, you know what I mean? So the more great minds that we can put in the same community, I think the more dynamic it'll be for everybody, you know? So yeah, if you guys could do that for me, it's much appreciated. Helps me get in front of more people like you guys. And we can continue trying to make the trading industry a better place, trade by trade, day by day. Okay. So yeah, with that being said, keep tabs on this potential idea. Okay, we don't want to see it break the midpoint of this order block. So if that is going to be an opportunity, when it drops down through it, comes back into it, or simply this revisits that, we don't want to see it come back up here in general. This is also a confirmed inversion fair value gap as well. We got the closure below that. And you could see that buy side, sell side, that is a balanced price range. It's got bullishness, bearishness. So we don't want to see it go up there. It has no reason, right? Until we fulfill liquidity, unless it's going to consolidate. Okay. So keep that stuff in mind. And again, God bless you guys. I'm going to leave y'all there. I'll leave y'all with this. Let me know what your favorite thing is on these live calls, or just from today, or just from this week. I'd be really curious to hear some of your guys' feedback. And yeah, just keep showing up, right? So we'll be live again tomorrow at the same time, 5 a.m., 5 a.m., 5:10, just to give us some room to do our analysis before the news comes out and answer questions, right? It's the main reason why I'm out here, is to answer questions, but you know, it's obviously also to showcase what we do and whatnot. But yeah, take the opportunity. Okay. If you're not following me on Instagram, definitely go do that. It's, WMG Trading on Instagram. No special characters, right? I'm the one that took the actual name. So if you see anybody trying to defraud what I'm doing, um, or whatever the hell you call it, impersonate, definitely let me know, because I'm trying to report them, because they're scumbags, and I'll be damned if someone uses my name to fuck somebody over. So yeah, with that being said, God bless y'all. Let me know if you need anything, and I'll catch you guys tomorrow at the same time, 5 a.m. Pacific Standard Time. Okay. All right. Peace and love, you guys. Take care.